you want to have your business expenses together. That is your biggest advantage when it comes to your taxes. So you don't pay taxes on your gross income. You pay taxes on your net income. So your net income is your revenue minus all your business expenses.
Hey, what's going down? I want to stop things really quick and let you know I've been thinking about you. So at the beginning of the year, I always get calls from different coaches and business owners that want to really maximize their online brand and turn their followers into paying clients, but they just don't understand how. So I went back and I studied the industry, and I noticed a lot of different coaches are offering different online programs that ultimately are leaving business owners stuck after the program because the business owner still doesn't truly understand what they need to do in order to build their online brand presence. So what I did was I created a 10-week learning plan. Now this 10-week learning plan is specific for your business where we work together one-on-one and I walk you through how you're able to turn your content into leads and sales, bringing your customers down a full journey. Now this learning plan is going to walk you through everything you need to know. So it's no more jumping from YouTube video to YouTube video trying to figure all this stuff out yourself. Now if you want to learn more about this learning plan, go ahead and click the link below and I'll talk to you soon.
Hey, what's going down? Welcome to another episode of the Connections Hub podcast, where we bring on a guest who's going to teach you a tip or a trick to help you grow your business. And today we got Ahngelea Christiany that's going to be talking to us about accounting and tax prep. But I don't want to steal her shine, so I'm going to go ahead and let her introduce herself and tell us what she does.
Hey y'all, I'm Ahngelea Christiany, the owner of Tax Keeping by AC. I am a licensed bookkeeper as well as a tax professional. I've been in the field doing accounting going on 7 years now. And it's really just my passion working and helping small business owners grow and be successful.
Whoa, that's super dope. And we need people like you. We definitely need people like you. So we're going to start from the beginning. Let's start. So what got you into accounting and tax prep? Where did it start for you?
If y'all want to go all the way back, I actually wanted to be a psychiatrist or like a therapist. And my dad was like, nah, you ain't going to make no money doing that. I'm not paying for you to go to school for that. So I just started looking into fields that I could do as a career, something that would be of interest to me. And I looked into accounting. I figured people are always going to need accountants, businesses and individuals, and they made good money. So I went into it. Also, I've always been good at numbers. That's pretty much always been my strongest suit. I've never been good at anything else besides numbers. I don't like science. I don't like reading, writing, but numbers has always been my thing.
So you like long walks to the bank?
Yes, of course, with a fat bag, okay?
No, I'm just kidding. And so accounting is new. Not new, but it wasn't something that you originally grew up and say, hey, I want to be in accounting. It was just parents, I'm not paying for that, so you had to figure out another way.
Yeah, actually, all the women in my family are either nurses or doctors. So originally as a young child, I always thought I was going to be a nurse or a pediatrician. And then I realized that was my first passion. I realized I don't like other people's blood. So then that was a knock. We had to scratch that one. And
when did you realize that? What age was that when you realized
I was in high school. So my mom's a nurse. She got me an internship at her hospital one summer while I was in high school. So I was working with the babies. It was so cute until it wasn't. And I was like, oh, I can't do this. I can't be cutting on other people. They blood just shooting everywhere. It was nasty.
Yeah.
It wasn't for me. And I actually was in medical classes in high school. And I went and I saw them do an open heart surgery. I almost hit the ground. You can hear them crack the chest open. Like the chest, you heard it. I was like, nah, this ain't for me. So I had to switch it up real quick. And so that was next was the therapist. And then I had to figure out something else because Daddy was like, I ain't paying for that. So.
No, that makes sense. So accounting, where did you go to school?
High school or college?
College. Where you
I started off at UTSA and I ended up graduating at U of H with my undergrad and I got my MBA at UHD.
Whoa. God. Now that's what's up. So today we're going to be talking about I want to start off with taxes because, that's a big thing right now. We're coming upon tax season for businesses, tax season for individuals, and just really knowing the ins and outs of that. So I want to start with, let's say I'm a business owner, small business owner, and this is going to be my first year filing my taxes. What are some things that a small business owner should look for or have prepared?
So first off, you want to have your business expenses together. That is your biggest advantage when it comes to your taxes. So you don't pay taxes on your gross income. You pay taxes on your net income. So your net income is your revenue minus all your business expenses. So you want to make sure you have your business expenses organized and categorized, so that way, one, is going to save your tax preparer time, which will also end up saving you money on your tax prep. But every penny that you're keeping track of is saving you money on the taxes that you're actually paying. So you want to make sure that you're keeping track of every penny that you spend towards your business.
So how does keeping track of my money help me save ultimately? How does that help me save?
So let's say you're not keeping track of your business expenses. Then you come at the end of the year or the beginning of the year, it's like, hey, here's all my information. I need to get my taxes done. So now we're combing through to itemize your business expenses. If you have a diligent accountant like myself, we're going to be able to capture majority of your expenses. Most accountants are not doing that.
One second. So what do you mean by business expenses? 'Cause I want to get that.
Business expenses as in you're paying money for advertising, you're paying money for business cards, you're paying money for clothing, uniforms, you're paying eating out, going on business lunches, business meetings. All of those things, anything that you are spending on towards your business is a business expense. The only thing that is not a qualified business expense, and what I mean qualified as a tax deduction, are fines. So if you are paying late fees, paying penalties on sales tax, payroll, insufficient fund fees, things of that nature, those are not tax deductible. You cannot deduct personal interest. So if you're paying things on your credit card, you can't deduct personal interest. But if you have a business card, you can deduct business interest on your business card.
So business to business, personal to personal.
See.
Business to business, personal to personal. I hear that. Business to business, personal to personal. So going back to it, so how does keeping my business expenses ultimately save me money? You were going through it.
So if you come in at the end of the year and now we're itemizing all your expenses, if you do not have a diligent accountant who's actually going to go through line by line and itemize it and categorize it, they're missing expenses. So let's say you actually spent $30,000 in business expenses. That was your actual spending towards your business. But they only captured like $10,000, $15,000 because they weren't being diligent. They're just coming through trying to hurry up and get to the next person. You have missed out on $15,000 of tax savings because now you're paying an additional $15,000 in taxes. Well, you're not paying $15,000, but your taxable income is greater by $15,000 because that $15,000 of business expenses was not captured. So having a great bookkeeper throughout the year or keeping track of your own business expenses is key. That is the ultimate key to your tax savings. That's the number one way to save on your business taxes.
Let me let y'all know. She tried to say that off camera. And I said, no, hold up. Repeat that on camera really hard like you just did. Yes. So she just let us know. So are there, let's say we have a bookkeeper or we don't have a bookkeeper. Are there any softwares or anything that we can use to keep up with our own taxes?
So I definitely recommend QuickBooks. QuickBooks is one of my just favorites as far as business owners. One, it's affordable, and two, it's easy use. What's the word?
Easy to use, I think.
Easy to use.
Yeah.
Easy accessible. Because they actually make it for self-employed individuals. So you don't have to be an accountant to really understand how to use that software. So that's how they set it up. So it's easy for you to use as a business owner to keep track of all your revenue, expenses. They have all kind of apps that connect to it. So if you're using PayPal, Shopify, you can easily connect those apps, those platforms to QuickBooks, and it automatically populates all those transactions. As well as you can pay your vendors, you can pay your contractors, pay your employees, you can submit invoices. All of the good stuff is all on QuickBooks, all in one place, and is affordable.
How much is it?
They have plans starting at $25. That's the QuickBooks Online, and then they have different tiers just depending on exactly what you need, what all you need. And I think they have a mobile app, which is even cheaper than the $25. So you don't have access to it on the computer, it's just on your phone. And I want to say, don't quote me, it's about like $15 or so. But check it out and see which one would be a great fit for you. We also provide QuickBooks hosting, where you can, if you don't need direct access to it online, then we would host your QuickBooks and also just maintain that account for you.
You with your company?
Yes, our company. And there's no fee for us to host it. You're just paying for the actual bookkeeping services.
So what do you mean by hosted? Like you guys comb through my stuff the whole year for me?
Oh, of course, yes.
Okay, bet. I got to be a member? Like, is there any?
Yeah, so that is one of our bookkeeping plans. So just in general, we have bookkeeping plans. And then one of the options is we can host your QuickBooks for you, or you can host your own plan. And so when you host your own plan, you set up your own QuickBooks Online account, and then you give us access. If you don't want to have your own monthly QuickBooks, then we will host your QuickBooks on our platform and just keep track of all of your business transactions.
Yeah, that's legit. And that saves time. So what would you say the benefits are of having a bookkeeper, and when should I think about getting one?
So the benefits of having a bookkeeper is, one, you have somebody who is already automatically keeping track of all your business transactions. And you want to make sure, be careful of who you're doing business with, make sure they're reputable, make sure you have some type of arrangement and agreement of how often they're going to be keeping track of everything, because if you ever need something, you want to make sure it's going to be available. So one, that's the benefit, is they're automatically going to be keeping track of everything. You have a professional who you can always go to as far as any financial advice. And of course, we are keeping track of your numbers. I can only speak for myself. We're keeping track of your numbers, and we are going to advise you appropriately as far as, is it time for you to put yourself on payroll? Is it time for you to get into a physical location and be paying rent? Or advising you in different ways that you can save money on taxes throughout the year. So we don't wait until tax season or the end of the year to give you tax advice. As your bookkeeper, we are advising you all year long on what are the different tax benefits that are available to you. So for instance, last year they had an employee retention credit. So if you had employees, you could basically get a refund of your payroll taxes. You can get refunded on your payroll tax. That's saving small business owners a grip.
Thanks.
So we're not waiting until the end of the year to let you know that as soon as that came available and we are aware of all the qualifications, we're on the phone, we're letting you know, hey, you qualify for this. This is how much money it's going to save you. You want to sign up or not?
Thanks.
So it's just keeping you up to date with the different tax updates, financial updates for your business. And of course, as an accountant and as a professional, I have different access to all kind of professionals that can get your business in the right direction. And the second half of that question was,
when should I think about getting a bookkeeper? When should I get one?
Typically, I have businesses that come to me around the 2 to 3 year mark. They're in business and they're already like, hey, I need a bookkeeper. Because now they've been in business for long enough and they're like, okay, the past 2 years, it's been a hassle. One, for me doing my taxes. It takes months because you ain't had your business expenses itemized. Then two, you can't qualify for anything for your business if you don't have proper financials, right? Like if you want to get a loan, if you want to qualify for even sometimes getting an office location, they want to verify that you're a business, that you're making money. You have to have financial statements.
I even was trying to get recently a credit card, and I was getting it was under my business, and they came back and they were like, okay, cool, we approved you for this amount, but it's contingent upon you providing 2 years of business financials. So
exactly.
It hit me like out of nowhere.
And even personally, if you want to buy a house, move into an apartment, get a car, if you're self-employed, you have to show that your business is generating income. So having a bookkeeper in place, you'll already have your financials. For us, we have Dropbox for all of our bookkeeping clients, and we save all of our reports, all of your financial statements in that Dropbox folder. So you have direct access to all your financial statements anytime. So whenever you walk into a bank, they're requesting X, Y, and Z, boom, 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 you already got it, and you can send it directly to them without even contacting us. But typically around the 2 to 3 year mark is where I see people coming in really looking for a bookkeeper. But we also provide bookkeeping services, or I would say QuickBooks training for newbies. Okay. So if you're a new business owner, and I've been getting a lot more traction with that, business owners are starting to be more aware of, okay, I do need to be on top of this. I need to be on top of keeping up with my business expenses. So we will teach them how to use QuickBooks specifically for your business. So we tailor the training based off your business, your services, exactly what you need to be using QuickBooks for. And then I think the really cool part about it is we add a quarterly service to it. Nice. So not only do we teach you how to use QuickBooks, so basically you are doing your own bookkeeping, but we come in every quarter. We make sure that everything that you have inputted in is correct and accurate. Because what used to happen is we'll train you on your QuickBooks, then a year later you come for taxes and we look at your QuickBooks and it's a hot mess. Like everything jacked up, and now we got to clean up a year's worth of business transactions. So now we provide the quarterly service, and that helps because it's a lot easier to clean up 3 months of work versus 12 months of work.
Thanks.
So we come in, we clean it up, make sure everything's accurate, and then we also do a financial review with you. So we review the financials with you because a lot of business owners, especially new business owners, are great at making money or great at doing whatever they do, but it's the managing and understanding the financials that is the difficult part. And that's why a lot of businesses are not successful, because they're not looking at their numbers. They're not putting together strategies based off the numbers. The numbers don't lie. So you have to go off what the numbers are saying. And so that's what we do.
No, that's good. And so is there a difference between, would you say having a bookkeeper and an accountant, or is that the same thing, or how does it differ?
So I would say not all accountants are bookkeepers and not all accountants are CPAs. Me personally, I'm not a CPA, but I am a licensed bookkeeper. I went and got my license to be a bookkeeper, and I do extra CPE or extra credits for the IRS to be a registered tax professional. Okay. So if you go in the directory, you can see that I am a registered tax professional. So it just depends. Every accountant is almost like being an engineer. Every engineer kind of has their own little niche of what they focus on. So not every accountant is going to be a bookkeeper, and not every CPA does bookkeeping. I actually have a lot of relationships with CPAs because they don't do the bookkeeping. They just want to do the taxes, and so they refer bookkeeping business to me.
Oh, that makes sense. And you touched on something. It's kind of funny. Well, it's funny to me. So on the internet around tax time, it's always all these people that come out of nowhere that say, I can do your taxes, or come get your taxes done with me, all these different things. But you said that it's what is this website where I can go look up people and make sure they register?
Just Google IRS directory, okay? So I'm glad you brought this up, because I was having this conversation with an individual earlier this week. Not every person who does taxes is an accountant. So I just want to clarify that. Just because this individual does taxes does not mean they have any background in taxes, any background in accounting. They're just trying to get a quick buck. People are realizing how much money is to be made in the tax industry, and the entry barrier is very low to do taxes. So there is no qualifications for you to actually do taxes. All you have to do is register with the IRS and get a PTIN number. And typically, you can get that the same day that you register. So there are no qualifications, which is why they made the CPA, which is basically a tax designation. I don't want to focus primarily on taxes, which is why I'm not a CPA. My goal is to actually get my CMA, which is, we can get into that a whole nother day, but that's more subject to financial accounting and investment management, which is where my firm is leading to. But that's why they created the CPA, which is a tax designation, just to show that, hey, I have the qualifications, I have the expertise to do your taxes. So just be careful with these people who are charging you $400, $500 to do an individual tax return. That's insane. Check their qualifications, see what their background is. A lot of them are not in accounting whatsoever. They're like Uber drivers, or they work at a restaurant, or they're assistants or something. They do something completely different. Some of them, they do insurance as well. A lot of people do taxes and insurance, but still, just check the people you guys are doing business with. And if they're charging you outrageous fees for an individual return, you're a W-2 worker, and they're charging you $400+, just get out of there. And the problem is, honestly, they don't represent you, and they can't represent you because they don't have the qualifications to represent you. So I'm able to provide limited representation. CPAs are able to provide full representation. So if they mess up your taxes, which a lot of them do, they just be putting stuff on there just to maximize. I had a lady come to me. She's not a student. She has kids. What else was on there? She doesn't have a business. She doesn't have a day. That's what was on her taxes. It said she has a home daycare. It said that she was in school, and of course it had all the kids on there, and it had some other crap. She's not a student. She doesn't have a daycare. They put all of this stuff on there just to maximize the refund. So if you're looking for people who's gonna jump every hoop just to make you a fat refund, go ahead, pay that crazy money to these crazy people. That's fine. We are going to maximize your return legitimately. One, I'm not going to risk my brand or my reputation to blow up your refund. There are really factual, legitimate ways that you can increase your refund. But just check the people that you're doing business with, because this lady didn't even know that this person had put all this stuff on her tax returns. And when she came to me, she was just like in awe. It was crazy. But I deal with this stuff every year. It's not even surprising anymore. So just check the people you're doing business with.
You see how hot she got from that, y'all? That's passion. You see that? She said that she got hot. She was upset. No, that's how I be too. That's how I be with the social media people online too. It's I know how I be. But no, that's funny. That's funny. That's funny.
Crazy.
So no, but you brought up something during that. So you said that you have individual taxes and then you have your business taxes. Let's say that I'm a individual W-2 worker, but I do have a business or I started a business. So you know how they say like, oh, if you have a business, you can get certain write-offs and different things like that. How does it work?
Okay. So one thing I want to clarify, if you are a sole proprietor, which means you do not have a registered business, as in you don't have a DBA, LLC, or anything like that, you're a sole proprietor. You have a business on the side, but you have no registered business name. You're a sole proprietor. Or if you're a DBA, or if you are a single member LLC, you are considered self-employed. They're all considered the same as far as tax purposes. So it doesn't matter if you have a registered business or not. If you're doing business, you're considered self-employed, and so you can file your business taxes. You can file taxes.
So even if I don't have it registered, so like let's say I never got my LLC, I never got anything paperwork, but I can still say, hey, I'm self-employed on the side?
Yes.
Nice.
So if you receive a 1099, you are also considered self-employed. Again, you do not have to have a registered business name for you to file your taxes as self-employed. So a lot of people who don't realize they're self-employed are Uber drivers, because you guys receive 1099s. Any 1099 contractor, if you are working with somebody and they issue you a 1099 at the end of the year, you are considered self-employed, which means that you are able to take business expenses as a deduction. Again, that's one of your biggest business deductions. It's not the only one, but one of the biggest ones. And so what I always recommend people, especially Uber drivers or independent contractors, keep track of your mileage, keep track of your gas, keep track of your vehicle expenses, keep track of anything that you're spending money on that's related to that business activity. So if you're going out and you're meeting with your manager, that's a business expense. If you had to buy specific clothes, that's a business expense. If you are Uber driver and you have tissue and hand sanitizer and all that stuff in your car for your riders, that's a business expense. Keep track of all of that. Nextly, as a business owner or self-employed, you're able to take your vehicle expense. Now, they have changed the law in regards to that this year, but you're still able to take it. And so you can either do actual car expenses. So your actual expenses would be gas, car washes, car maintenance, oil changes, anything of that nature, new tires. Or you can do the mileage. And so every year they update the mileage rates. But if you're keeping track of your mileage all year, which I recommend my clients to always do, keep track of your mileage. And of course, we're keeping track of their vehicle expenses as well. Then at the end of the year, we just see which one is going to give them the greater deduction. They did change that this year, so now you can't really go back and forth between the two as easily. I'll just talk to your tax professional about that. But those are your two options. You can either take the actual vehicle expenses or the mileage if you're self-employed. What else can you do? Home expense is another big one. So if you're working from home a lot, if you have a designated office space, you can take that as a deduction. The only thing is you cannot have an actual physical location. So you can't do both. If you have a physical location, you cannot use the home office deduction. But those are just a few of the deductions that you can do as a business owner or a self-employed individual. when you are a single member LLC, your taxes are filed with your individual taxes. I get so many people come to me every year. I had so many people last year like, oh, I need to file my business taxes. I'm like, okay. I ask them for all their personal information. I already filed my personal taxes. How's your business registered? I'm an LLC. I'm a single member LLC. Your taxes and your personal tax, your business taxes and your personal taxes get filed together. It's all as one.
Yeah. Okay.
The only time you actually have a separate business tax return is if you are a partnership, because you file taxes for that partnership. And in some cases, you're not actually paying the taxes, you're just filing it, because the business report the whatever they've made and whatever they've spent, and then you break it out into the two partners or multiple partners. Or if you are a corporation, so if you are a S corp or a C corp, then you file separate business taxes, because C corps, that business actually pays taxes, and then the S corp is more just an informational return. You put in all the business information and then you get a separate report that you have to file with your personal taxes. So either way, if you are a business owner, either way, your business revenue or your business tax information should be on your personal taxes either way. If you're a single member LLC, partnership, corporation, it doesn't matter. In some way or form, your business information is going to be on your personal taxes.
So do you file them the same day? Like, is the same person, or is it, how does that work?
Not really. You don't have to. So let's say you're a corporation. You might have a CPA who does your corporate taxes, but they charge way too much for your individual taxes. So then you have someone else who does your individual, and they put the corporate taxes on there. So whoever does your corporate taxes, they're going to give you a K1. The K1 is what you would give to whoever's doing your individual taxes, and they would put that on your individual tax return. But it doesn't have to be the same person. A lot of my clients, I do their personal and their business. It doesn't matter though. Like the same with bookkeeping. I have clients who I do their bookkeeping, they have someone else do their taxes, but I also have clients where I do their bookkeeping and their taxes.
Okay, no, that's good. So the magic question that everybody want to know, well, that I want to know. Now, so write-offs, we hear it all the time on the internet. You can write this off, you can write this off, you can write this off. How does write-offs work with a business? What can I write off? Like, how does that work?
So again, write-offs are your business expenses. Those are synonymous.
Okay.
So a write-off is your business expenses. So again, that's why it's so important for you to be keeping track of every penny that your business spends. I can't enforce that enough. Everything that you spend on your business is a business expense. The only exception is penalties, fines, late fees, and personal interest. You cannot deduct personal credit card interest or any personal interest. But if you have any loans, any business credit cards, all of those interests, that is a write-off or a business expense.
So, like, how does that work when it comes to, like, you ever see videos online when they be like, oh, get a business card, you can write it off, or, like, things like that. Is that the same thing? Like
a car?
Yeah, like if I get a car.
So, yes, if you have a car that's 100% used for business, you can write that car off. Again, it's one or the other. You can do the mileage or you can do the actual expenses. Actual expenses includes the lease payment, interest, all of that, but you cannot do both. Now, what I do recommend is I have individuals that are S corps. And so for S corps, you get a little bit more wiggle room, right? Because now you're a corporation, but it's called a flow-through tax. So basically, the business itself doesn't pay any taxes. Whatever the business net income is, it flows through to your personal tax return. But if you have a car, let's say you have a car that you use 100% for business, as a corporation, you can set up like bylaws or corporate agreements that's saying your employees get reimbursed on car expenses, they get reimbursed on utilities or home. They can basically rent their home as an office to themselves. So you can do that when you're an S corp. And so basically, you kind of can widen your write-off range. And so you can take the mileage deduction on your business return, but also be reimbursing yourself for any vehicle expenses. Does that make sense?
Yeah, you might be doing I became an S corp like at the end of last year, so
Okay.
that's why I'm asking. You might be doing my taxes, man. You know,
so like there's a lot that you can do
like,
when you're S corp, and then as far as health insurance, right? If you're self-employed, you can take. People always say, "Oh, I'm self-employed now." When you're a small business, you're always on a budget, and that's no problem. But don't cut back on your health insurance because one, when you need it and you ain't got it, it's always going to be a problem. But that is a business expense. When you are, it's actually, I wouldn't call it a business expense. On the taxes, it's in a different area than the write-offs or the actual business expenses. But let's say you pay $3,000 a year in your health insurance, you can take that total $3,000. It reduces your gross income directly. So that's a big adjustment to your income. Another thing is IRAs. So if you have a traditional IRA, that's the same thing. It reduces your gross income. And so those things of that nature, that's where tax planning comes into play because we'll let you know, hey, these are the big factors that are going to hit, that's really going to make an effect on your taxes. Business expenses, IRAs, health insurance, and a lot of business. I've mentioned health insurance a lot because a lot of business owners are always trying to avoid health insurance. I'm not ready. I can't afford it right now. But if you look at the long-term picture, health insurance is necessary, and it's not going to hurt your pockets. It can actually benefit you in the long run. No, facts. I'm glad you said that. But you brought up something, and this actually is a friend question. By the way, if y'all ever got questions, just let me know. But this is a friend question they asked me because she does different stocks and stuff like that. So she wanted to know, how does like the stock industry, and when you're getting, I guess like that's investment income, like does that affect your taxes, or how do you file that? How does that work? Yes. So stocks is either going to be a short-term gain or long-term. So it's either, if you've held that stock for over a year, then it's long-term. And so long-term, that's where you want to be because the taxes isn't so bad, right? It's capital gain tax, but on the long-term taxes is about 25% and less, right? Now, short-term is where it hits you. If you hold that stock for less than a year and you sell it, now you're in the short-term capital gains. And that's about 35% and up on your taxes. So I know crypto is in this year. Everybody's in the crypto. I hope y'all have bought it and held it, because if you made significant gains on that and you sold it within a year, you're going to be paying taxes on it. And what a lot of people don't know is the U.S. is a pay-as-you-go tax system, which means you're required to pay your taxes throughout the year. You're not supposed to wait until the end of the year to pay your taxes. So if you have capital gains, and if your capital gains have exceeded a certain amount, and I'm not saying a specific amount because it depends on your income. If your capital gains have exceeded a certain amount, you are required to pay that tax like in that moment. So if you waited, now you are not only paying 30+% in capital gains, but now you're also paying penalties on top of that. So that's something to keep in mind, as well as just self-employed individuals in general are always trying to avoid the self-employment tax. It's not something to just be scared of. Self-employment taxes actually can benefit you because if you've been paying it all year, you get to deduct 50% of that on your taxes. And that's another piece that comes directly out of your gross income. So if you ended up paying $5,000 total in self-employment taxes, you get to take $2,500 out of your gross income, directly out of your gross income. So if you get to the point where you actually are supposed to be paying self-employment taxes, don't run from it, don't hide, because it's just trailing right behind you. So you might as well just pay it and get that tax deduction, because if you don't, you're going to pay the full amount at the end of the year plus penalties. And the IRS is funny in that way because they don't tell you, they don't add on the penalty. They don't show you like, oh, this is the penalty amount. They include it up in there. You know, it's automatically in there. So, and one of the biggest things, you didn't ask,
no,
but
let me know. Let me know.
On my mind.
Let me know.
Don't file late. Stop filing late.
What's the due date? What's the late date? When is it late?
I don't know why y'all file late. So if you are a S Corp, a C Corp, or a partnership, your business tax is due March 15th. individual taxes and self-employed individuals that are not corporations or partnerships, your taxes are due April 15th.
Okay.
And I think this year it falls on the 18th. But just don't file late. If you feel like you're not prepared or you're not ready, file an extension. It literally takes 5 minutes to file an extension. Okay? Don't file late, because what they do is we prepare your taxes and then we submit them. The IRS makes sure everything is right, because they want to, if anything is wrong, they want to make sure they add that on. So they make sure it's right, and then they send you your letter like, okay, this is the penalty for filing late. So, and then every month that is late, you're paying 5% interest on whatever you owe or whatever was due to you. So even if you get a refund, you're just losing, you're putting money on the table. You're giving the IRS free money. Why? Like, why? You know what I mean? Just file on time, please. Like, it makes no sense to file late. And then what a lot of people also don't realize is when you file an extension, you are filing an extension to file later, not to pay later. The IRS still want their money.
Oh, no.
So keep that in mind. If you owe taxes in the prior year, then you are required to either pay 100% of that tax or make an estimated payment of what you think your current taxes are, which would be at least 75%. So if you pay at least 75% of what you actually owe, then you're in the clear. But it's not an excuse to not file. Just file an extension. If you file an extension, you still have to pay something. So make sure you make your payment with your extension. It avoids a lot of interest, penalties, and headaches.
Free money. It avoids a lot of giving away of free money.
Yes.
Giving away free
Stop
money.
Giving away free money to the IRS, okay? And they're banking on y'all doing it, because y'all keep doing it. Y'all always do it.
I had the bookkeeper that I have now, she used to work for something in Houston. That's how I met her, like one of the organizations in Houston for business. But she said that the IRS puts like late fees into like their overall budget type of thing. Like they know this percentage of people are going to be late.
They know,
what?
Exactly. They know this percentage of people are going to be late. And most people who are late are business owners, or either business owners or people who pay taxes, because we don't want to pay it, right? We're trying to wait till the last minute to actually pay. It's like, okay, you don't want to pay, but you're paying more at the end of the day. Just file on time, please. And if you can't file on time, do an extension, but just pay whatever you had to pay last year. Just pay 100% of that amount and you'll be good to go. I had my mom do that. She typically doesn't have to pay too much, but we paid, right? She filed her extension, she paid 100% of what she paid last year, and she actually ended up getting a refund because she normally files late. So all those years, she was really just paying a whole bunch of penalties more than she needed to. So when she paid 100% of her amount and we filed on time, like, she got so much money back, you know? And it's just stop filing late, please.
Free money, giving away free money. But no. So I gotta ask, what are 3 secrets that we probably don't know as a business owner that we can put into place to make the upcoming tax season easier for us? What are 3 secrets?
Okay, 1 is tax plan. Make sure you are actually planning for your taxes, and you have to plan for your taxes before tax season. Okay, so you don't come and sit down and be like, hey, I need to get my taxes done. And how else can I save money on my taxes? It doesn't work like that, because majority of tax benefits expire at the end of the year, right? If you think about it, you are in the new year, you're paying taxes on what you did last year. So if you want to save money, you have to have those action items happen in the taxable year. You can't come to me in March and be like, how can I save money on last year's activity? They've all expired, there's nothing I can do at this point. So 1 is just tax planning. If you need any help with tax planning, give us a call. I suggest to do that about mid-year, because if you start in June or July, then you have enough time. You got another 5 months to actually do what you need to do, instead of coming to me in December trying to do tax planning, and now you're rushing to do everything before the end of the year. Right. So that's your number 1 key, is doing tax planning. So if you are a new business owner, if you recently had a big lifestyle change, as in like you're getting married, because now you're not having 1 income, now you have 2 incomes, that's going to put you in a whole nother tax bracket. So people who are engaged or getting married, if you've had a major pay increase, pay raise, those are all good factors for you to schedule a tax planning session. You can be in a whole different tax bracket, and so you just want to see what are the different benefits that you qualify for, because what you qualify for may not be the same thing that your neighbor qualifies for. I get that a lot. Like, oh, my coworker, we make the same amount of money, and he filed his taxes, and he got this much, and I got that much. I'm like, he might be a homeowner, he might have kids, you ain't got no kids. Like, there's a lot of factors that come into play that would give you a different outcome. So just everything we do is tailored to you. It's not a cookie cutter box. So number 1 is tax planning. Number 2 is bookkeeping. So whether you get a professional bookkeeper or you're keeping up with your own business transactions, you need to be keeping track of every penny that you spend on your business. That is the biggest factor as to saving money on your taxes, are your business expenses. Keeping track of your write-offs. Whatever you spend on your business, keep track of every penny, because that's going to be the biggest determination of your taxable income.
I don't want to mess up your flow, but I got a question real quick. So how do you know, and this, I don't do this, but I'm just asking, your curiosity killed the cat. So what about, like, do you really know if somebody paying for stuff that's personal on it? Like, let's say I got a business credit card and I use my business credit card for a lot of personal stuff, but it can show up and look as if it's business transactions.
So that's a good question, right? So that's not for me to determine. If you tell me that's a business expense, it's a business expense. I'm not going to sweat you over it. I'm not your mama, and I'm not the IRS. But who will sweat you on it is going to be the IRS. So if you ever get audited, right, for best practices, it's also good for you to keep track of the money that you're spending, but also keep your receipts. So I'm glad you asked that, because I have not said that yet. Make sure you're keeping your receipts, okay? So that's how you can differentiate, or that's how the IRS differentiates between, is this an actual business expense or is this a personal expense and you're just trying to make it look like a business expense. So they will, so for instance, like places like Home Depot, Walmart, things like that. Starbucks, yeah. Like, and even Starbucks is kind of hard, but what they do as far as meals, so we're talking about meals now, what they do as far as meals is they'll ask you, who did you meet with when you paid for this?
What?
Because what a lot of people also don't realize, right? Let's get into it. Is y'all like to go out to eat and y'all like, oh, it's a business expense. It's a business expense. All right. But when the purpose of a business meal is that you were dealing with business, you were talking to someone about business, you had a meeting about business, something related to business was going on while you was eating or drinking, okay? And typically they do not allow, if you're going to bars, alcohol, like stuff like that, they typically don't allow that as a business expense, because you ain't doing too much business at the strip club, you ain't doing too much business at the bar. So those are typically disallowed. But if you are having a substantial amount of entertainment and meals, eating out, they will ask, that's how they verify if that's a business expense. They'll ask, okay, well, who did you meet with at this time? So make sure you got your calendars booked and you got the people up in there, because they will ask you. As far as like receipts though, like Walmart is a good one, because people go to Walmart, right? You're getting maybe office expenses, but you can get anything at Walmart, right? So when you have your receipt, then you can verify, no, I got this notebook, I got this little letterhead for my desk, all this stuff. So that's substantiating that that's a business expense versus a personal expense. So keep your receipts. That is what the IRS uses to verify if business versus personal, and if they will allow you to take that as a business expense.
No, sorry to mess up your flow. You got me one more
so
secret.
I got one more secret. Well, I'll put that one in there.
No, you can't do that. Let me give you a minute to think. You can't do that. Nuh-uh.
So to save, so I've already said a couple, and I'll just give you guys 2 extra ones. Self-employment taxes. People always trying to avoid self-employment taxes. Do not avoid your self-employment taxes, because it hurts you in the long run. And then 2 is your IRA. Contributing to an IRA account. 1 is going to help you for your future. You will not believe how many business owners I work with who have nothing set up, accounted for as far as their retirement. It's like, you just plan on working forever. It's one thing, like when you're a W-2 worker, it's easy to contribute into a 401k. That's easy. But when you're a business owner, you're so focused on running your business, making sure you have enough money to pay taxes at the end of the year. You're not even thinking about your retirement. So the fact that you can contribute into a retirement account and it can be 100% deduction, like it's literally reducing your gross income, that makes a major difference. So contributing to a traditional IRA, open one up. You can get one at TD Ameritrade, Schwab, Bank of America, almost anywhere you can get an IRA. And if you want to talk more in detail about IRAs, let me know, because there are a broad array of different IRAs. I'm mentioning specifically traditional IRAs today, but just depending on your lifestyle and what you have going on within your business, you might have another IRA plan that's a better fit for you.
Okay, no, that's good. That's good. That's good. This been jam packed. You gave us some gems. We equipped. We equipped. Okay, no. So let us know, where can we find you and have you do all our tax stuff so we ain't got to worry about it?
So if you go on my Instagram, which is Taxkeeping by AC, TAXKEEPING BYAC, you go to my bio, go to my link tree. You can book a tax appointment. And you can also, if you want to get started with our app, we have a tax app. So you can download the tax app from there, or you can just send me a DM if you have any specific questions. But I do free tax consultations. So if you just have questions, you want to talk, give me a call, because I'd rather give you guys some legit advice that's actually going to help you and benefit you than you guys be trying to Google everything and you get 50 different answers. Thanks. Or you find Ray, your cousin, and he refer you to Boo Boo, his friend who do taxes. I just rather you avoid the headache. So just give me a call, send me a DM, and I will answer your questions. You can also check out my website, which is taxkeepingbyac.com. And I have a lot of details on there. All my service information is on there. And then you can also send us a message directly from our website.
No, that's, yeah. Go check her out. That's definitely
And our blog.
dope.
Our blog is on the website as well. And so we'll have some new articles coming out, but the ones that are on there are really great if you're just looking for ways to get some advice, how you can, we talked about business expenses, IRAs, all that information is on the blogs.
You know I'm about to hit you with this one. So you know what you can do with them blogs for content. I know I got to hit her with the content.
Help me out.
Look, take the blog topics, and make some reels about it. So kind of how we just talked about. You just gave us 3 secrets that most business owners don't know. So hit them 3 secrets in the reel for us. Or any blog topic that you got, make the tips that you're doing, make a reel about it, or make a quick video. I remember I used to blog a lot, and what we used to do is I'll record a short video about the blog, and then we would even use that blog sometime on something like YouTube because it's longer form content. So just making that content and stretching the content. I know I got to put the content plug in a little bit. No, but definitely glad, so super happy that I had you on the show, and I'm definitely glad you were here. And that's going to be it. So you guys can definitely go subscribe, follow us, and tune in for the next episode. Thanks.